screen. Okay, good morning, everyone. My name is Gannon with Gannon Tax and Bookkeeping. I'm the enrolled agent of the group. What is an enrolled agent? An enrolled agent or an EA, they're federally licensed tax practitioners who specialize in tax preparation and have unlimited rights to represent taxpayers before the Internal Revenue Service. Enrolled agents must pass a comprehensive exam that requires them to demonstrate proficiency in federal tax planning, individual and business tax return preparation, and representation. We also must complete 72 hours of continuing education specifically on taxation every 3 years. A little bit about myself. I worked in the tax office doing bookkeeping and payroll for about 10 years, and I have been doing taxes for over 3 years now. I started my business in 2020 and I'm loving working from home. So let's see if I can get this started for you. All right, so this is how my mornings start out. This is my best friend, Lita, and her dogs, Mac and Logan. We walk every morning, mostly, unless we're real tired. This is my family. This is my mom and I up at Mount Rainier a couple years ago, or last year, actually. This is my grandma, myself, and my mom, and some of our family friends. And then this is my dad's family. He has a lot of siblings. These are my two cats who are my assistants. This is Gonzo and Walter. They're adorable. So with them most of the time. I also hike a lot. This is a recent hike I took out to Mount Tam, or near Mount Tam, where you can see the San Francisco. One of my hobbies, or a couple of my hobbies, is I do photography and I like to make jewelry. So these are some earrings I made and some pictures that I took and edited myself. All right, so today, since most of us are self-employed and we have businesses, I'm going to go over briefly how income taxes work with your business. So different type of entities, you can be a sole proprietor, single member LLC, partnership, S corporation, C corporation. I'm not going to really talk about C corporations, and there's also nonprofits, which I'm not going to go over as well. So for a sole proprietor, what is a sole proprietor? A sole proprietor is any person who decides to work for themselves and does not form a different entity type. What are the filing requirements for a sole proprietor? A sole proprietor files a Schedule C with their individual tax return. And how does their sole proprietor pay their tax? So sole proprietors pay self-employment tax on their first $142,800 of net earnings. So that's after your expenses. Self-employment tax is 15.3%. I know we all feel that one. As a sole proprietor, you also pay income tax as well. The owner does not take a wage, meaning they don't pay themselves out of their profit, or that they pay themselves out of their profit, but not through payroll. But they can and should pay their employees on payroll. They typically do need to make estimated tax payments, as they don't have withholding or not a W-2 employee anymore. Unless you're married and you eat up all of your spouse's refund. You know, that happens a lot. So what is a single member LLC? Basically, it's the same as a sole proprietorship. A lot of people don't understand this. Why would you want to become an LLC? I know so many people tell everybody to become an LLC. Basically, you'd want to become an LLC for liability purposes. So if you have assets that you need to protect, that's something you need to talk to an attorney about. But you do have to pay extra money to California to be an LLC. There's a minimum fee of $800 a year. You can pay more. So I typically say talk with your attorney, talk with an insurance agent such as David, and see if you can get insurance that might cover you the same for less than $800 a year. And then also you have to keep in mind that you're going to pay more for your tax prep fee because you're filing more forms. So typically tax preparers will charge you more. The LLC has to file a Schedule C, just like a sole prop, but then there's an additional form 568 that has to be filed with California. They also pay self-employment tax. just the same as a sole proprietor, and still pay income tax as well. Don't take a wage through payroll, and they typically need to make estimated tax payments just the same as a sole prop. So partnerships, what is a partnership? Partnership is a business which is formed by 2 or more individuals, and there should be a formal agreement. Don't shake hands because your friend is not going to do all the work. I've seen so many partnerships fall apart this way. A partnership can be a general partnership, a limited partnership, a limited liability partnership, or a multi-member LLC. The filing requirements are they have to file a Form 1065. The Form 1065 then generates a K-1 for each partner. The K-1 shows income and expenses that flow through to each partner to be reported on their 1040. The taxpayer still pays the self-employment tax, just like the sole prop, even if no distributions are taken. So many partners get very confused on this. If you haven't taken any cash out yourself, you're still paying tax on what flows through to you, your distributive share of the partnership income. The partners do not take a wage through payroll, and each partner most likely needs to make estimated tax payments as well. So our next entity type is an S Corp. What is an S Corp? An S Corp is a special tax status granted by the IRS that lets corporations pass their corporate income, credits, and deductions through to their shareholders. It allows businesses to avoid double taxation, which is what happens when a business pays corporate tax and its owners pay tax on their earnings. An S Corp can be an LLC, which elects to be taxed as an S Corp, or a C Corp, which elects to be taxed as an S Corp. It's basically a smaller type of corporation. And let's see, their filing requirements are they have to file a Form 1120S, just like the partnership. The 1120S then generates a K-1 for each of its shareholder owners. The K-1, again, shows all of the income and expenses that flow through to each partner to be reported on their 1040. The shareholder should take a payroll if they're working for the company. So if you're a single, sorry, I'm watching my time. If you're like, if I decide to become an S Corp, then I should be taking a reasonable wage. The IRS says reasonable wage. So it's basically like, what would you pay somebody else to do your job? So you do end up paying self-employment tax through payroll, but you don't pay self-employment tax on the net earnings that flow through to your 1040. So that's, you save a little bit there sometimes. So there's a little calculation we have to do to see if it's beneficial. So the shareholders do take payroll. Each shareholder does pay income tax on the income that passes through from the business. But again, like I said, they don't take self-employment tax or don't pay self-employment tax. That is the end of my presentation, but I did want to just go over, I think I have like 1 more minute. So I just wanted to go over a couple of super fun facts. The IRS is, as of mid-December, the IRS is 6.2 million, has 6.2 million unprocessed individual tax returns, and they've lost about 33,000 full-time employees in the last couple years. So, you know, it's good to be nice to your tax preparer. And if you need to get a hold of the IRS, I just really apologize on behalf of the IRS because it's not happening right now. So thank you guys. That's it for me. I don't know how to stop. Oh, stop sharing.
Well done. Well done.
Thank you.